Morning, everyone. It is May 6th, and this is your daily financial news update. Really, what today's going to be about is kind of a mix of good news, bad news. The bad news is historically facing, right, kind of April data that we just got to talk about. But there are clearly some green shoots starting to form, which we knew and expected, as we've talked about on this channel. Once you got through the chasm, the worst of this thing, the good news would start to trickle out. And I think it's very clear that we are kind of in that space right now. So let's just talk about it again, kind of the order as I read through things this morning. Had to start with Disney. Disney reported after the hours. It was something you have to track because it kind of has it kind of needs crowds, right? Disney theme parks, Disney cruises, movie theaters, and the like. One thing that they don't need crowds for is Disney Plus, right? Disney Plus has been a lifesaver for them. Thank goodness they brought that out in November. Sometimes it's better to be lucky than good. Thank goodness they brought that out. They are getting, they've got subscriber counts that weren't expected for 4 years. So, congratulations for Disney. But on the kind of income statement, right, when you look at their income statement, it is pretty amazing to realize that really with 2 bad weeks of March. Now, granted, that's actually not quite fair. They had 2 bad weeks in March in the US. They really had a bad Q1 in China or Asia. So it's really not fair to say this, but this is what was reported on the channel. They had a $1.4 billion hit to revenue. Wow, right? Because the theme parks are a big driver of income for them. So that was interesting to see. They now forecast losing about $1 billion a month as long as theme parks stay closed. So, we are going to be watching with bated breath to see how they open in Shanghai. The thing that I'm struggling with is just like with local restaurants, right? The restaurants, the pizzerias, all of these things for you and I. Let's just say they had 20 tables. They're going to be reopened with 10 tables. When is it profitable? I don't think it's profitable at 10 tables. And then you take that to Disney and go, okay, so Disney Shanghai is talking about opening at 50% of capacity. And they're talking about all these extra cleaning costs, which is all the right stuff. Good morning, everyone. But I'm wondering if they're losing money at 50% occupancy. Again, to have a business that's based on crowds, then to put a governor on income, and you have to raise expenses. I don't know. I mean, I think there's a lot of local restaurants that just won't open, right? They're continue with takeout because they can eke out a profit when they just open the kitchen, but they leave the front of the store closed. I don't know. I mean, Disney's an iconic brand. Disney is not going anywhere. I'm not calling any of that, but Disney's going to suffer. It's probably going to lose money for a year, right? So, yeah, economies at scale is absolutely fundamental, and I just want to know where the break-even point is. That's what I would love Disney and all these other companies, right? Because if you believe that this thing is a, I don't know, a 4-quarter event. Good morning. I want to know where companies' break-even point is. Because if you can run an operation at break-even and be part of the solution, part of the results, I think your brand goes up. And then when we get out of this, you're off to the races. Good morning, everyone. It's just really, it really bothers me. I don't think Disney makes money at 50% occupancy in their theme park, especially because of the added expense. But we shall see. Next up, the sharing economy is getting smacked. Right, a lot of these kind of Silicon Valley companies that I've been talking about for a while kind of being in trouble. You're seeing the first cracks in the sharing economy. You had Airbnb last night talk about 25% layoffs after raising $2 billion, right? They raised $2 billion in the lending market here, 3 weeks ago? And now they lay off 25% of their employees. Uber this morning talking about a 14% layoff of employees. The sharing economy, again, kind of that, the thing that was so hot, the unicorns of the Silicon Valley before this, not getting much love today. And, I think we're going to see that for a little bit while longer, so we shall see. Beyond Meat, kind of this plant-based burgers. First off, you had one yet? They're actually pretty good. I've had them. Looks like they're growing. They're still very small, right? Less than 100 million, but they are growing. I actually did see, coincidentally, McDonald's CEO talk about, yes, plant-based option will be added to their menu at some point, which, I guess you could see coming, but just another example that this is coming. And this is becoming interesting, obviously, because there's meat shortages across the U.S. You can hear Wendy's, another thing we found this morning. Roughly 25% of the locations don't have their fresh beef delivery, which I don't know what that means they're going to be selling. Like, I don't know. It's just weird. Yes, I've been calling for technology layoffs for quite a while. I don't see the pipelines that everybody else sees. So yes, I agree with that, unfortunately. These layoffs, just so we're clear, these aren't the low income jobs, right? This isn't restaurant workers. These are six-figure jobs that are being let go, which is why I've been saying the Silicon Valley housing market is in trouble all year, because it's this cascading of things, and they won't come back as fast. It just won't, right? This is kind of 9/11 combined with the Great Recession kind of put together, right? You have the depth and the speed of 9/11, and then you're going to have the duration of the Great Recession. So it's why I've not had a good opinion about Bay Area, SoCal, and New York real estate. I'm sorry, it's coming. Again, Wendy's was running out of beef. It wasn't 25%, I'm sorry, 20%, 1 in 5 stores. ADP had kind of our first look at the April jobless numbers. They're reporting 20.2 million job losses in April. Again, a lot of those jobs, to go back to the earlier point about the Valley, were kind of the lower, like kind of restaurant, retail, not all of them, not saying that, but a fair number of them. A lot of those jobs come back, right? As the states reopen, a lot of those jobs will come back. Not all of them by any stretch, but many. It's the higher end jobs that are now getting hit that I've been concerned about for some time. And I think that kind of starts to cascade and build. When you start losing six-figure jobs, that is when the real estate market really starts to get hit, right? Because rightly or wrongly, no judgment here, but when you're working in retail or fast food, you're probably renting. Yes, yes, it's going to be pretty bad. Then we have Mattel. I thought one thing that would be hot would be toys during this, again, because you can buy toys, obviously online, share, Amazon and the like. And I don't know what this says, but Mattel was down, had a very sharp drop off, and maybe Barbie is my generation. It's just not cool anymore. But Barbie was down 10%. That shocked me. Again, maybe it's just a different world and people play on their phones and apps and the physical world is gone. Maybe this is just a sign that maybe if Mattel's not up in an environment like this, when are they going to be up? I mean, I don't know. Then we have Pinterest. Pinterest, again, was out with earnings. And I think they're being more, they're doing more information about ads, and they're admitting they saw a sharp deceleration of ads in March, and they're down 17%. So I don't know if this is winners and losers, right? Second tier, maybe like Twitter, Pinterest are down, where Facebook, Alphabet are winning. I don't know. I honestly don't think we got the truth. They were parsed words. They were carefully crafted words from Alphabet and Facebook, in my opinion. I don't think the ads are there, and that's why you're seeing the headcount go off. And what they're doing is they're just hoping and praying that Q2 turns around. We'll see. But you know what? They didn't want to give forward guidance, so they don't have to tell us jack anything, right? So, we won't know for sure for another, what is it, probably 80 days, 85 days, because they just reported. But I think Pinterest is telling us what's really going on. Now, you could argue it's a second tier, fair. But I just don't see the ad revenue supporting Alphabet and Facebook. But again, I could be wrong. As for Sam Zell, there was a little question that came up. I'm watching the same video. I trust Sam Zell. He's got no motivation. He's just kind of a gruff guy. I've read his biography, right? Grave Dancer is a moniker that he wears with pride. Real quick from the Bloomberg video, I found it on YouTube, is there's been no price discovery. Just like I've said many times, sellers remember yesterday and buyers want tomorrow. He basically said the same thing. And then there's been nobody meeting in the middle. So um, I'm going to do I'll do one live stream probably later today just on that 30 minutes with Bloomberg on Sam Zell. So look for that later in the day. But in short, I listen to Sam Zell. Looks like they're talking about no sporting events, concerts, big gathering, thousands and thousands of people until 2021. I mean, it probably makes sense, but that's going to hurt. That's going to hurt, right? So, on a positive note, again, coming out of this, the good news is turning, right? Or the news is turning and becoming positive. Mortgage apps to purchase were up 7%. That's the third week in a row. So all this talk about real estate just crashing and falling off a cliff across the country doesn't look like it's going to happen. Just like I've said on this channel, I think most of the country real estate's fine. Maybe a small single digit, 2, 4, 5%. There will be markets, again, Bay Area, LA, New York, that get hammered or crushed, Vegas. But most of the country is going to be fine. The available inventory is nothing. And even if we have 25% unemployment, we have 75% that are employed. Q2 will be the depth, and we'll be coming out of this. So all these people calling for a crash in real estate investing aren't paying attention. I've talked about it for a long time. Yes, good news for real estate. Learn your market. Learn your market. Watch it. Watch it. Some of my students now are talking about seeing, changes and price drops and things of that nature. Yeah, I agree. So this is not doom and gloom for real estate. There are, again, just so we're clear, there are markets that are in big trouble. They're the ones that you think, and I've talked about many times. But those markets, while important statistically, because they have big asking prices, transaction-wise, nothing. Right? The rest of the country is just fine. So flipping the page, saw that New York Times, again, up to 6 million subscribers. Makes sense, right? But again, just like Pinterest, ad revenue is hurting. Ad revenue fell double digits. This is why I do not believe the well-crafted words from Alphabet and Facebook. I believe they said words that we heard, and they'll be technically correct. Like, oh, we saw a turnaround. Okay, well, great. If ad revenue fell 50% and it went up 2, you could say you saw a turnaround. I think they were talking about, they were making the rosiest picture possible because statistics lie. So it is going to be interesting. United Airlines, again, I've been saying it for a while. Why are we flying, right? They're laying off 30% of the people. Lufthansa, largest airline in Europe, it's losing $1 million an hour. That's hard to do. That's like .com stuff, right? There were companies doing that back then, but damn. On the good side, again, we are reopening. I saw a stat. I haven't verified it, but let's hope it's true. But by May 15th, 75% of the country via population will be quote unquote open, or at least partially open, which is pretty awesome. Let's wish and hope that keeps going. I haven't heard anything about Georgia, which is good news. Right, they were first to go, as I recall. So this is all good stuff. Again, we're coming out of the chasm. It's going to get increasingly better from here, I hope. But again, we got some nasty numbers coming. Friday's jobless number, woo. I don't know. I'm going to guess 17.5% unemployment. It's just going to be bad. But we shall see. We got a bunch of students suing colleges now to get tuition back. This gap year is going to be a real thing. And again, just kind of last thing, kind of oil and gas is going to start to uptick, right? If it's true, we get to 75% of the country kind of starting to reopen, at least at some level. People are going to start filling up their tanks again. So, yeah, it's going to be interesting. Again, I haven't filled up my tank in a month and a half. All right, I don't think I've driven 20 miles in a month. So, it's going to start turning around. Oil, gas will start turning around. I don't think anybody makes money at $25 oil. But again, you got to get to the bottom to get to the other side. And I think we are at the bottom and we're getting to the other side. So let's just keep this going. I think the real estate news is generally good. I think going forward, cost of capital is going to stay cheap for a long time. I think most of the country's real estate market is fine. I do think there are some markets that are just in trouble, but that's okay. At the end of the day, that's what I got for you today. I do have my interview with Anna Kelly here in a few minutes for our Wednesday session, so that should be fun. And I'm going to try to do that Sam Zell article later in the day. Um, cool. Think I'm dreaming on oil? That's cool. So we shall see. All right, everybody. Have a wonderful, wonderful day. And again, what is today? May 6th. Take care.